You first need to understand what a startup business line of credit really is. Because if you're trying to get this kind of funding arrangement with no sales, bad credit, no personal guarantee, and large approval, you got to have a conceptual understanding of the whole thing. So what is a business line of credit? Real quick. I know you do. You think you do have, understand, but I'm going to give it to you in a certain way, in a different way. So a business line of credit actually gives you the option to take out a loan known as a draw, but does not require you to take out a loan when you apply. So if you are approved, your account will have a maximum credit limit. For example, they can approve you for $50,000, okay? And you can then take out a single loan or a series of loans against your credit limit and will only pay interest on the amount you borrow. So if they approve you for $50,000, you can say, you know what? I will need 10 grand out of that 50 grand. So when you take 10 grand out, you only have 40 grand in your line. Or you can say, you know what, I'm going to take three series of 5 grand each. So this is how it works. So you can also, when we talk about business line of credit for a startup, you have to really distinguish that from an installment loan. Okay, lines of credits are totally different from installment loans. So you can also borrow with your startup. You can actually get a loan, a direct loan, and use the cash right away instead of getting a line of credit. Okay, so when we talk about you receiving a startup loan, you'll receive the entire amount right away with the conditions, or about the loan. The lender will actually specify to you what kind of conditions you have to abide by. Okay, so when we talk about the types of lines of credit available for startups, we are talking about secured business lines of credit and unsecured business lines of credit. In today's conversation, everything I'm talking to you about will be unsecured. In other words, there's no personal guarantee. You don't have to pledge any collateral at all. You don't have to pledge any personal collateral or business collateral. It's all unsecured. And the thing you need to really understand here is that there are some conditions that you need to satisfy before you can actually access this startup business line of credit with no sales on an unsecured basis. And I will explain everything to you, but you have to understand that at the end of the day, you need to have skin in the game. You need to have some skin in the game. If you just think that you can just get a startup business line of credit with no sales, bad credit, no personal guarantee, and large approval, without you committing something, without you risking something, then this video is not for you. Okay? You need to have skin in the game. So, step number 1, you need to understand what a startup business line of credit is. Step number 2, you need to know the requirements. Okay? By the way, welcome back to the show. Really appreciate having you here. We're having a conversation about startup business line of credit, no sales, bad credit, no personal guarantee. How do you get it? Okay? And I was just talking to you earlier about the fact that you need to have skin in the game. So, step number 2, you need to know the requirements. And when we talk about a startup business line of credit, there are 8 requirements that you need to satisfy. First of all, you need to have a business entity. Okay, and I'm just saying this because a lot of viewers believe that I just had an idea of a business, so I'm already in business. Simply because I have an idea, simply because I started doing something on the side, doesn't mean you are in business. No, there are some conditions. You need to actually file paperwork with the state. You need to actually choose your legal structure. Have you done that? Are you an LLC? Do you even understand what that means? Are you an LLP? Are you a LP? Are you a S Corp? Are you a C Corp? Talk to me about that. Those are things I want you to really clarify and crystallize so you are a proper entity. You need to choose your business structure, your legal structure. After you do that, you need to actually have a business bank account. Okay? You need to have an EIN. You need to file paperwork to acquire an EIN from the IRS. Those are things that are important. So that's why when I was just talking to you about the fact that some viewers and some people in general, they think, well, because I have a business or in my head, I have a business, I'm good to go. No. And so the second requirement, so the first requirement, business entity. Second requirement, good credit. The thing is that good credit is an important criterion in terms of getting a startup business line of credit. However, if you don't have good credit, there are ways around those. Okay, I will talk about that later on. But there are ways around. A business plan is one way to bypass that requirement. You can show strong financial projections. That's another way. And so good credit is important. Another requirement is a personal guarantee. Lenders will want you to have a personal guarantee. But again, as I said, if you're able to actually write a strong business plan, strong business plan, and show great financial projections that are backed up by actual numbers, by real numbers, based on a trend in your industry, you can actually get away with the requirement to get a personal guarantee to actually get the line of credit. Another criteria is that revenue. Okay, by the way, I want to quickly remind you, we are talking today about how to get a startup business line of credit, no sales, bad credit, no personal guarantee. So lenders want you to show revenue. Okay, if you go to any bank, you go to an online lender, you go to a credit union, you go to an alternative lender, they want you to show revenue. Okay, they want you to maybe like have 100,000 a year or 10 grand a month. Some lenders want you to have like a $250,000 a year before they can actually consider you. But if you are a startup, if you are a new business, you have not gotten the chance to generate revenue yet. And this is why it's important to write a strong business plan that actually crystallizes your business model. You need to show financial projections that actually crystallize, that clarify your business model. Another criterion is years in business. Same thing. Lenders want you to be in business for many years, but the thing is, you're new. You just a new kid on the block. You just happen to be here. Okay, how do you bypass that requirements? Again, you want to show in the business plan that even though you are young as a business, the potential in your industry is just fantastic. This is the only thing that can allay the lender's fear that you will default on the loan. Okay, it's really important. And also, lenders want you to they want to estimate, they want to size your business industry and scope. It's important. Now, if you are let's say a startup with no sales and you were looking for a business line and you happen to be in an industry that's growing like crazy, that's really good for you. That's bonanza, right? Because the industry is already growing. So it's just a matter of time before you also grab your share of the pie. So this is why in this kind of circumstances, you know what, you want to have a strong business plan. You want to have someone who can actually present a compelling case about your business, and this is really important. And also, you have to understand, we are here looking for a startup business line of credit, no sales, bad credit, no personal guarantee. The question is, if you were ever to be approved, how are you going to repay that line of credit or the amount that you are charging? Questions that you need to think about, ponder, and then answer. And other criteria that the lender might ask you when we talk about the requirements, business plan. Okay, so you need to have 4 things: a business plan, financial statements, a loan proposal, and collateral. Let's talk about the business plan. Now, business plan is very simple. It is a roadmap. It is a navigational tool that tells the lender. It tells the lender, hey, listen, here is our past. Here is where we came from. Here is the whole thing, how the whole thing started, the brainstorming, the trials and errors. We failed several times. We failed, and then we came back up. That's the past. This is basically you acknowledging that, hey, listen, there has been some common journey together. Now, the second step is you have to think about a set of financial statements. I'm not saying one financial statement because there is indeed a set. There are 4 of them. Actually, more than 4. There are actually 5 or 6 or 7, depends. But the 4 primary ones are balance sheet, income statement, statement of owner's equity, and you have a cash flow statement. The reason why there is a 5th one, you have a company note to financial statements. Sometimes it's called disclosure notes. What I'm trying to say here is what you want to prepare: a set of accounting reports that actually tell the lender, hey, listen, I may not make money right now. I have no sales, but there is potential in my business. You should take chance. You should take a chance on me. I mean, the answer will be negative anyway, but you gotta try somewhere. You have to start somewhere. Okay, and also the loan proposal. So you also need, what's really the loan proposal? Loan proposal is actually a document whereby you ask the lender, hey, listen, I would love to have $75,000, and I want to use the cash for this and this and this and that. And here is how I plan to repay you guys. And could you please approve me? It's basically that. It's kind of similar to a business plan, but it's more quantitative. A business loan proposal is more quantitative. It's really direct. One bump. Not trying to ask several questions. No. And so you also need to think about collateral. Even though here we say no personal guarantee, there are ways to avoid personal collateral. But if the lender says, hey, listen, I need collateral, then you can just leave them away. Just drop them. Okay. Go to the next lender. That's all. Because listen, you have a lot of lenders out there who are willing to take a risk and earn some awesome cash. Now, the third thing you need to do here is to open a startup business line of credit. By the way, I want to quickly remind you of today's topic. I'm still having a conversation with you about startup business line of credit, no sales, bad credit, no personal guarantee, how to open one. And so basically, when we talk about the actual steps that you need to take to open your startup business line of credit, there are 3 things you need to do. Only 3 things. First, you want to review your needs and eligibility. I already talked to you about the requirements, the needs. Now, what are your needs? What do you need to achieve? Why do you need the money? Talk to me about the use of loan proceeds, right? Because you're not just getting the startup business line of credit for anything. What do you need the money for? Talk to me about that. So you need to have a clear idea about this yourself. And the thing is that, and this is those occasions where you have to sit down, you have to write down on a piece of paper your objectives, your goals versus where you are at right now. So you have to do this kind of existential analysis to make sure that you are indeed actually reaching your goals. Okay, and think about your eligibility. Are you eligible? Is your company eligible? And try to compare lenders. Okay, now lenders, not all of them are just they are offering you the best APR, the best whatever. No, some lenders have very expensive conditions and terms. So if you were looking for a startup business line of credit and you said no sales, I have no revenue, I have bad credit, I don't want to post personal guarantee, I don't want to pledge anything, my question to you is, and that's the question I asked you at the beginning of this show, what kind of skin are you willing to drop in the game? Because you got to have something. Either you have a good credit, or you have done your homework in terms of preparing a business plan, preparing a set of financial reports. That way the lender knows, okay, this person is really taking this whole thing seriously, because they know that you already have a bad profile. But then if you are able to change that around, you'll be able to see a lot of people. So this is really important. And one thing you need to understand is that after you reviewed your needs and eligibility, make sure that you compare lenders. Okay, you want to look into the whole landscape, see what traditional lenders are offering, see what the fintech lenders are offering. Okay, so this is where the real battle happens now. So you have traditional lenders versus fintech lenders, and then you apply. Once you have the go ahead, and just apply. I want you to keep a few things in mind though, because it's really important as we're talking about a startup business line of credit with no sales, bad credit, no personal guarantee. There are a few things you need to keep in mind. For real, you need to know that if you want to get this type of funding program with bad credit and no sales, make sure that you always have your EIN. Because you're trying to transfer here, you're transferring the loan application from the individual realm into the business sort of arena, right? Okay, so you got to have your EIN. And after possessing your EIN, taking charge of your EIN, please go to a branch or online, trying to call the bank or a CU branch online. or go there physically. And we always tell people, you know, when you go to a branch, a bank branch, please be on your Sunday. You want to dress as if you were going to an interview, because first impression counts. I'm telling you, you can try this and let me know how it went. First impressions always count. They will think, oh, okay, you know, if you go to a branch, and they will really feel comfortable and honor that you are respecting them by dressing well, by talking well. No emotions here. You're not really. You're not fighting with them. Okay, and you can so apply at a branch of a bank or a credit union. And if this is an online lender, make sure that you have a convo first. Make sure you have a convo with the staff before applying. Okay, you need to have some kind of a context before launching your startup business line of credit application. This is important. And remember that a business line of credit for your startup can be really helpful if you need money for working capital and emergency expenses. Okay, you may also want to use the line of credit to finance projects that require progress, regardless of how much money you have now. And one thing I also want to say here is that a line of credit for your startup may have a lower interest rate and higher credit limit than business credit cards. Really, this is what it is. It depends on the loan amount. It depends on the conditions also. Let me just say something that it is not really complicated. Okay, it is not complicated to actually get a business line of credit with bad credit and with no sales. It is not really complicated. The thing is, you might be thinking, well, I have to be in business for 6 months. I have to make money. I have to make revenue. Otherwise, they're not letting to me. No. The formula I just showed you, if you apply this formula religiously, you will see the result. For the formula mean what? Business plan. You must have a compelling business plan. You must have a compelling. So again, it doesn't matter. It doesn't matter if you have I don't know. It doesn't matter at all what type of loans you're looking for. The bottom line here is that if you want to qualify, you need to actually make sure that you review the landscape. You see what really is possible for you, and you go after it real hard. Okay, and you don't have to be in business for 1 year or 2 years to qualify for a business line of credit. If you're a brand new startup, like fresh out of the oven, you can still qualify. It's really about your strategy. Okay, your strategy in terms of underwriting, your strategy in terms of talking about issues to the lender. Like when you go to a branch, you have to have a conversation with the lender about why you need the money. And if you need the money, that's because there is an issue actually within the company. Like you probably have seen some opportunities in the market, but like in terms of you getting the funds to actually take care of that opportunity, you can't do it without a line of credit. That's why you need this business line of credit in the first place. So if you are able to articulate, if you can articulate those sort of things to the lender, they might actually bless you with a business line of credit. Now, one thing I also wanted to explain to you is that it doesn't matter whether you're an LLC, an ALP, an LP, a C corporation, an S corporation, or an unincorporated corporation. It doesn't really matter. You can still get your startup business line of credit if you apply certain formulas religiously. Okay, this is important. And the business line of credit might appear in your personal credit report if you are personally responsible for that debt, and the lender reports the account to the credit bureaus. Okay, so this is, you have to think about it that way. And one thing I also want to say here is that lenders may alternatively report the account to the business credit bureaus, and it could be that the lender appears in your business credit score, in your business credit report. So this can actually be factored into your business credit score. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about startup business line of credit, no sales, bad credit, no personal guarantee. So I explained to you that you need to understand what a startup business line of credit is. You need to know the requirements. You need to open a startup line of credit, and you need to keep a few things in mind. Thank you. I'll speak to you another time. But until then, remember, stay Marvelous.